Good morning, everyone. My name is Natasha. I'm from Vancouver, Canada. I'm an architect, and I work in real estate development. So most of my day-to-day job is basically evaluating projects and deciding whether or not to invest in them. I had the chance to look at some of the housing in the two communities, and I will run through a couple of different housing product types, but let's start with the undeveloped sites or greenfield sites, which is starting on a bit of a somber note, but it will get better in the next couple of slides. So the way we looked at, in particular, the Hellenic property was through the eyes of a developer. How would they evaluate risk and costs involved in developing the site? And is there a business case to go forward with it? Everyone is aware of the remediation that needs to take place on that land, which is a cost factor. And when all the other costs are kind of taken into account, it's very hard to build a business case for the total cost that comes up. And this was run on pretty conservative assumptions. You know, there's other elements that haven't even been factored in, such as for developers, such as a long holding period while they have to go through all of the entitlements. The cost for the purchaser to actually build their homes on the land after it's complete. And we put the land in at zero cost when we did this analysis. So there's a high barrier to developing the site as it currently stands. And there's a lot of risks involved even on the financing side. When you're diving into a project like this, it can be difficult to get financing from banks. So our recommendation is that for now, hold off. Put your public investment into a different area. There are some silver linings for the owner of the property to make some immediate proceeds from the land, potentially selling off some of the land as park or conservation area in conjunction with the Department of Natural Resources. And in the future, once the levy system is certified, that's a big risk that's taken away. It might be easier at that point for a private developer to come in and the community can put out a structured bid, or the owner can put out a structured bid for private developers to come in and put forward some concepts for that development. But at this stage, it should be kind of lower on the priority for public investment. So where do we see focus in terms of housing? Well, a similar theme to what the other panelists have talked about in their areas is focus on what already exists. So there's a really rich housing history in both communities that needs to be preserved. Generally, the elevations of those areas are higher, so you can get the flood protection. You don't have to put in all the infrastructure because it already exists. So, so there's a lot of infill and rehabilitation that can be done in those areas, and that's really where we believe the immediate near-term focus should be. How to address that? There's a couple of ways. One is, you know, just general beautification of the area. So the infrastructure is in place in a lot of places, but there are areas that need some TLC. So spruce those places up, put in sidewalks where they need to be, get people to have pride in their neighborhood so that they move into those areas. The more people you have in the neighborhoods, it makes it a safer place to live. It improves the quality of life. Absentee landlords was a theme that came up when we spoke to a lot of you. One way to address that is to introduce a tax or some sort of penalty for the people that aren't occupying their homes. Sometimes just a small penalty incentivizes people to either sell their property and make it available for others to buy, or will make them put it on the market to add to the rental stock that you have in the market. So it doesn't have to be a huge tax or penalty, but sometimes that's a little push that you need to get people to invest in those properties that have been standing vacant or derelict for a long time. And those proceeds, part of it could be used to provide small homeowner grants. So incentivize people to move into the areas. They're taking the renovations on at their own cost, but if you get them, you know, small grants, that can help them burden the cost of taking those projects on. Another suggestion is to work with local banks and try to set up a loan program specifically for residents in the areas that need to finance those renovation costs. So it's easy for them to access financing, and it's one less burden or hurdle that they have to get to in terms of putting some energy into some of these lacking properties. The third project product type that we looked at was multifamily. And we looked at it from two perspectives, both on the affordable side and on the market side. There's demand for both multifamily products. Right now, only 3% of the population is being served by the affordable housing that exists in the two communities. And on the market side, there's a lot of people that commute in from Monday to Friday, or they're on rotational work in the area, and so they might not want to buy in the area, but they need places to stay and live. And right now that product doesn't really exist. Sometimes hotels are filling in the gap for those type of people. So in terms of the affordable side, the burden can't totally be on the housing association. One way to address and bring in more affordable housing into the community is by having mixed income multifamily developments. So that means that the city provides the land, that's the asset that they're providing to the private sector, and the private sector in exchange builds the property. What the city can also do is they can say that we mandate that you have to have at least 20 or 30% of affordable housing within that area, so a certain proportion of those units are reserved for people under a certain income threshold. And the rest are at market, so the developer will kind of balance the two out so that you can introduce more affordable housing, but you're still putting the onus on the private sector to build those projects. We believe that both housing associations from both communities have to be involved, because they're the ones that are going to tie in the rent subsidies, and they're the ones that have to manage those projects, at least the affordable portion, once they're built out. On the market family side, that should be left to the private developers, but there are a couple of areas where we thought there was opportunity to build multifamily housing, which is on the riverfront of both the Morgan City and Berwick sides. There's a couple of vacant lots, and in other cases there's older buildings that aren't in use and could be demolished to make place for multifamily. Or on the Berwick side, if you have commercial on the ground floor, multifamily can be built above. So the advantage of that is that you're giving people access to river views, because you're a little bit higher in multifamily developments. They're not just one-story buildings, and it's an asset that a lot of people would want to live on the waterfront. It provides a lot more activity, and the city can help facilitate that by helping private developers. You don't have to pay for anything, but you can help them through the zoning and entitlement process. So these might not be the traditional kind of cookie cutter projects. So if the city can introduce and help facilitate those private developers in getting out their creative ideas, there's some very interesting projects that could emerge from putting some energy into that. So with that, I will hand it back to Ulrich, and he's going to conclude the session. Thank you.